Nissan has just slammed the brakes on its highly anticipated electric vehicle revolution in the United States, and the timing could not be more controversial or consequential. Picture this. You have been eagerly waiting for your dream electric SUV, maybe even following every teaser and prototype update, only to find out that its arrival is now postponed until after the next American presidential election. For millions of car buyers, investors, and industry watchers, this decision feels like a thunderclap in the middle of the world's most fiercely competitive auto market. Why would a global automaker, once hailed as a pioneer in electric mobility, make such a bold and risky move right now? And, perhaps more importantly, what does this signal for the entire future of electric vehicles in America? Are we witnessing a simple hiccup, or is this the first sign of a much deeper industry retreat? To understand how we got here, let's take a step back and look at Nissan's journey. Nissan, once the darling of the global electric vehicle movement with the introduction of the Leaf, enjoyed an early lead in the EV race. The Leaf, launched in 2010, quickly became the world's best-selling electric car, cementing Nissan's reputation as an innovator. Over the years, Nissan managed to sell more than 1 million electric vehicles worldwide, a remarkable milestone that only a handful of automakers have reached. Breaking that down, Nissan sold over 230,000 electric vehicles in China, an impressive 320,000 in Europe, and more than 210,000 in North America, especially the United States. These numbers are not just statistics. They represent a real shift in consumer behavior, a growing awareness of environmental issues, and a hope for a cleaner, greener automotive future. But as we look closer at the American market, the momentum seems to be shifting, and not in Nissan's favor. The electric vehicle landscape in the United States is not just about technology and engineering. It is shaped by a complex interplay of politics, consumer sentiment, and, above all, economics. For many years, generous government incentives fueled the American appetite for electric vehicles. Buyers could receive up to $7,500 in federal tax credits when purchasing a new electric vehicle, and an additional $4,500 for used EVs. These incentives were transformative, turning EVs from a niche luxury into a mainstream aspiration. Dealerships saw surging interest. Automakers scrambled to announce new models, and cities across the country began investing in charging infrastructure. However, all of that changed on Independence Day, when the so-called One Big Beautiful Bill was signed into law by the current administration. This sweeping legislation did many things, but for electric vehicle buyers and automakers, one provision stood out: the elimination of federal tax credits for new and used EVs, effective September 30th, 2025. For the industry, this was a seismic shock. Practically overnight, the financial calculus for both buyers and manufacturers changed. Suddenly, the price gap between electric vehicles and traditional gasoline cars widened dramatically, making EVs less attractive for millions of middle-class Americans. Nissan had been planning an ambitious American expansion, with at least 5 new electric models set to launch over the next several years. These included not just SUVs, but also sedans and smaller crossovers, aimed at capturing every segment of the market. But with the new legislation in place and demand forecasts turning pessimistic, Nissan has slashed that figure down to only 3 models. The most dramatic change involves the delay of 2 all-new electric crossover vehicles: a Nissan-branded SUV, codenamed PZ1K, and a luxury Infiniti version. Both were scheduled to roll off the assembly line at Nissan's Canton, Mississippi plant much sooner, but production is now pushed back by nearly a full year. The Nissan version will not see the light of day until November 2028, while its Infiniti sibling is now slated for March 2029. Even more concerning, Nissan's crucial battery supplier, AESC, has hit pause on the construction of a battery manufacturing facility in South Carolina, a move that casts further doubt on the local supply chain and the promise of American-made EVs. Is this just Nissan hitting the pause button to regroup, or is it a sign of something much more serious and systemic? Industry analysts and financial experts are sounding the alarm bells. According to StockTwits, the slowdown at Nissan is part of a broader industry-wide reassessment. Nick Casey, a respected voice in business journalism, notes that new United States trade rules and fading consumer demand are forcing companies to rethink their strategies. Cox Automotive, which closely monitors auto trends, points out that the leasing boom, once turbocharged by Biden-era tax credits, may soon run out of steam. And a major finance industry insider warns that if demand for electric vehicles continues to stagnate, America could be left with a glut of half-built battery factories and expensive supply chains that no longer make financial sense. The numbers behind Nissan's latest moves are eye-opening. The company is aiming to slash costs by 250 billion yen by fiscal year 2026, a staggering sum. As part of this restructuring, Nissan plans to reduce its global workforce by 20,000 employees over the next 3 years. CEO Ivan Espinosa has made it clear. We are prioritizing profitability over volume, making sure we bring only the most competitive vehicles to market. Nissan spokesperson Kyle Bazemore echoes this sentiment, stating that the company's goal is to ensure the Canton facility continues to produce highly competitive vehicles for the market. But the reality, as many insiders admit, is far more complicated and uncertain. This brings us to the heart of the dilemma. Is America losing its appetite for electric vehicles? Supply chain disruptions, unpredictable government policies, and wavering consumer demand are converging to create a perfect storm. Rare earth mineral shortages and new Chinese export restrictions are making electric vehicle batteries more expensive and harder to source. Trade tensions between the United States and China are adding another layer of complexity, with tariffs and export controls threatening to choke off vital components. Even Nissan's bet on its innovative e-power hybrid technologies, a system that combines an efficient gasoline engine with electric drive, carries risks. Will American consumers settle for a halfway solution, or will they demand a truly all-electric future? To better understand what's happening, let's look at how other automakers are responding. Nissan is not alone in pulling back from its electric vehicle ambitions in the United States. Toyota, another giant of the industry, has delayed production of its all-electric models at its Indiana plant, instead ramping up output of hybrid and gasoline-powered SUVs. Honda, too, has halted development of a large electric SUV that was intended for the American market, citing similar concerns over demand and profitability. In fact, across the entire industry, there is a noticeable pivot toward hybrid models, which offer many of the benefits of electrification, such as lower emissions and improved fuel economy, without the range anxiety and charging headaches that still plague full EVs. Meanwhile, the American electric vehicle market faces questions about overcapacity in battery production. AESC's decision to pause construction of its South Carolina plant is just one example of the risks involved. As battery plants sprout up across the country, from Nevada to Georgia, there is a genuine fear that if consumer demand does not materialize, these massive investments could turn into stranded assets. The stakes are enormous, not just for automakers and their employees, but for local communities that have pinned their economic hopes on the clean energy transition. But perhaps the biggest wildcard in this entire saga is the upcoming United States presidential election. Policy direction could swing dramatically, depending on who occupies the White House after the 2028 vote. If the new administration decides to bring back or extend electric vehicle incentives, automakers could quickly ramp up production again, reigniting the race for supremacy in the American electric car market. On the other hand, if the current policy direction continues, the pause could become a much longer wait, or even a permanent shift in strategy, with companies prioritizing other markets over the United States. So what does all of this mean for the future of electric vehicles in America? Is Nissan's decision just a short-term pause? Or is it the opening act of a much larger retreat from electric vehicle production on American soil? To answer this, let's explore several possible scenarios and their broader implications. One likely scenario is that major automakers, including Nissan, double down on hybrid technologies. Nissan's e-power system, for example, offers the range and convenience of traditional gasoline vehicles, combined with the environmental benefits of electrification and at a lower upfront cost. As federal tax credits disappear and consumer enthusiasm for EVs cools, hybrids could become the just right solution for millions of drivers, especially in suburban and rural areas where charging infrastructure remains patchy. Already, Toyota and Honda are aggressively increasing their hybrid and gasoline SUV output for North America, hoping to capture market share among hesitant buyers. Alternatively, automakers may shift their focus away from the United States altogether when it comes to cutting-edge electric vehicles. Regions such as Europe and China, where Nissan has already sold over a combined 500,000 EVs, may become the new epicenters of electric vehicle innovation. In these markets, governments continue to offer generous incentives, invest heavily in charging infrastructure, and set ambitious emissions targets. Consumers, too, appear more willing to embrace the all-electric future. This could result in a kind of technological brain drain, where the most advanced vehicles, features, and even jobs debut outside the United States first, leaving American consumers with fewer choices and less access to the latest technology. There is also a real risk of massive overcapacity in American battery production. As one finance industry source warned, if demand for electric vehicles continues to stagnate, the United States could be left with a patchwork of half-built battery plants and supply chains that are no longer economically viable. This would not only hurt automakers, but also impact suppliers, construction workers, and local governments that have invested heavily in the promise of green jobs and clean technology. The AESC plant pause in South Carolina is just the tip of the iceberg. Similar stories are unfolding in states from Michigan to Texas. But perhaps most importantly, the fate of the American electric vehicle market now hinges on policy. The upcoming presidential election represents the ultimate wild card. A renewed commitment to climate goals and electric vehicle incentives could breathe new life into the industry. But continued uncertainty or a further rollback of incentives could discourage investment for years to come. Automakers are watching Washington closely, ready to pivot their strategies at a moment's notice. The regulatory environment has never been more important, and even a single policy decision can reshape the entire market overnight. For everyday Americans, this is not just an abstract debate. It has real consequences for their wallets, their jobs, and their communities. If you are considering buying an electric vehicle, timing has never been more critical. With the federal tax credits set to disappear by late September 2025, purchasing sooner rather than later could save you thousands of dollars. The same goes for leasing. As incentives for leases begin to dry up, monthly payments could rise, making EVs less affordable for many families. For investors, the lesson is clear. Look beyond the headlines and dig into the details. Companies like Nissan are making enormous, high-stakes bets on where they think the market is headed. A single piece of legislation, like the One Big Beautiful Bill, can change the entire landscape overnight. Watching the next election and the regulatory signals from Washington will be crucial for anyone with a stake in the industry, from Wall Street to Main Street. And for everyone else, whether you are a car enthusiast, a tech geek, or someone who cares about the environment, this is a front-row seat to how quickly the global economy can pivot in response to new technologies, changing consumer preferences, and shifting political winds. The story of Nissan's electric vehicle pause is really a story about the intersection of technology, economics, and politics. It is a reminder that progress is rarely linear, and that even the most promising revolutions can hit unexpected roadblocks. Looking even further ahead, there are other possible futures. Strategic partnerships between automakers and technology companies could help share the risks and costs, focusing on breakthroughs in battery technology, charging networks, or even autonomous driving systems. Nissan, for example, may choose to team up with startups or established players to bring new products to market faster and more efficiently. Another possibility is a more regionalized production strategy, with Nissan prioritizing markets where electric vehicle demand remains strong, such as Europe or China, while scaling back investments in the United States until conditions improve. We can also look to history for parallels. The shift from horses to cars in the early 20th century was not smooth or inevitable. Many cities resisted, infrastructure was slow to catch up, and early adopters were often ridiculed. Likewise, the transition from gasoline to electric vehicles will likely be uneven, marked by fits and starts, and shaped by forces far beyond any single company's control. Yet, as history shows, those who adapt quickly and invest wisely can come out on top. So to return to our original question, is Nissan's move just a pause or the start of a much larger retreat from the American electric vehicle dream? At this moment, it appears to be a pause, a strategic regrouping while the company waits to see how the political and economic landscape evolves. But make no mistake, the pause is long and filled with uncertainty. The decisions made in the next few years by policymakers, consumers, and automakers alike will determine whether America remains at the forefront of the electric vehicle revolution or cedes that ground to Europe and China. Here's a fact that might surprise you. Nissan has already sold over 1 million electric vehicles around the world, but just over 200,000 of those were sold in North America. The real electric vehicle revolution, at least for now, may be happening elsewhere. If current trends continue, American consumers could find themselves on the sidelines, watching as the most innovative cars, jobs, and technologies migrate overseas. So what can you do? If you are interested in buying an electric vehicle or hybrid, now is the time to pay close attention. Look for deals, watch policy announcements, and consider your own driving habits and needs. If you are an investor, keep an eye on election results, regulatory changes, and the strategic moves of major automakers. And no matter who you are, stay informed, because the future of transportation is being written right now, in boardrooms, on assembly lines, and in the halls of government. If you found this deep dive helpful, do not forget to hit like and subscribe for more in-depth coverage of the forces shaping global economics and technology. And let us know in the comments. Are you planning to buy a hybrid or electric vehicle in the next few years? Or are you waiting to see how the road ahead unfolds? Your insights and experiences could help others navigate this rapidly changing landscape. Thank you for joining us on this journey through the twists and turns of the electric vehicle revolution. The story is